Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, May 7th, 2024. It's 12:31 p.m. Eastern Time is starting the video. I want to do a quick one, very quick, just kind of show you for active traders, and I've believe I've done a pretty good job of differentiating that, what an active trader is. That's be it a day trade. A trade's typically that lasts hours or days at most. And then, I always say if that's not your wheelhouse, just ignore it. I'll differentiate between typical swing trade, even trend trade, longer term trades, and then these active trades. Did have feedback when we were in that trading range. I was posting quite a bit of this. It was in active trading mode, and I'm talking about this trading range back here because it was conducive to it. And so this is the first one I've got out in a while, and I want to show you how this works and how I trade them. So I got this set up out to you on QQQ with this, I think I did cover it in the video, the 15-minute, and then I followed up, I believe, with this 5-minute chart on a static post for active traders. And you can see that broke. We're below it. It's a clean, well-defined uptrend line. Why isn't it going down? Well, that's easy. I also gave you the chart of SPY. I always say there's these different subsets of traders out there, and the main indexes. I mean, sure, there's small mid caps. There's the Dow, but most traders trade either the S&P 500 or the Nasdaq 100, and then within there you have futures traders and you have ETF traders. So you have those different subsets, if you will. The key is when you have almost identical setups. This one broke, and again, it's 5-minute candles just going sideways. Why is that? Not far from mere coincidence. It's because SPY, the same wedge I gave you, this is a 5-minute chart, hasn't broken down yet. So I started the video now because we're going to get it. It looks imminent to me. Got a nice day trade size short on. Already give you targets. This would just, this is an initial. If you're an active trader, I don't have to tell you this. You can target a gap backfill. There's today's gap. That'll be the first stop today. You can go in here and these 5-minute charts, you can hone in and get these little, what I call micro levels, little micro support and resistance levels. But I'm just kind of giving you a few right now on the 5-minute because I guess I gave you the 15-minute earlier. That was marked up. So and then of course you have the measured target for the wedge. You take the widest part of the wedge, which would be from here to there. You add that to where it breaks down. And that would take, look at that, never fails to amaze me how often I first put my support and resistance levels. That's a 513.86. You can also see a nice old thin zone right here, a thin zone created by this gap. Plus you had reactions above. And so the way this works is that's the measured target. So we'll come down, probably have a minor reaction on that first one there. This might take until tomorrow to get hit. Let me see. That's probably 0.75%. We can do that today. But there it is. There's the breakdown. So now what will happen is SPY traders are going to start to short and get stopped out. The longs will get stopped out. The flexible traders like me that will short or go long will start to short. And so QQQ now should start to accelerate. So you see now the biggest red candle since the breakdown. And so that's it. It's just simple stuff. And you can even, to put the odds further in your favor, you can then also pull up the charts of NQ and ES, the S&P 500 and Nasdaq 100 futures, and then also make sure that they've broken down comparable support levels, be it trend lines, usually going to have similar identical trend lines, and then price support levels. And so here's a little minor level, dip buyers have been doing what they do. And so what happens is these will start to get taken out. And again, you'll get those near-term targets I gave you earlier today for that active trade. And that's it. So that's how this stuff works. And here it goes. SPY just broke down, gave us that big red candle. Things should accelerate, and make no mistake, I've got a lot of moving parts in my head, and that's how I trade. I watch treasury bonds, ended up shorting IEF. I got a post out to you as well on that today. I'm sorry, ZN is what I took. And usually I do take TLT for the juice. I just took ZN because ZN was at that trend line that I gave you earlier. And here, I'll pull it up. Okay, so you can see, that was the ZN TLT long, although I personally removed that hedge. I took it as a hedge to the small index shorts that I took into Apple earnings, and still haven't added any to those shorts, but I'm naked against. I don't have this hedge, and now I officially closed out on the site. I'll throw out what I'm doing and also what the trade was. All along that was the target, that downtrend line. And look, you've already read this by now, so my thoughts were clear. That's a small fraction of 1%. So why risk milking it when you have, here's CN right at downtrend line resistance, where they're likely to step in and sell it, and then especially if that trend line goes, and it could be pretty quick. And then I wanted to share this too in this video, and I'll wrap it up here. So I posted this, lest anyone doubt the stock market's sensitivity to rising and falling rates. This is the NASDAQ 100 here in white, going back a couple months. This is a 15-minute chart, but that doesn't matter. I just use line charts going back into February. And so you can see the unmistakable correlation. Remember, when bonds, this is the 10-year IEF, it's when bond prices are going up, rates are going down. So the stock market rallies. Rates start, bond prices fall, means rates are then rising, stocks fall. And they return, and this is where you could see bond prices continued to fall, and it finally took their toll. This is when the stock market was grinding around, but then you got a heads up here. Treasuries, remember, this was all real-time stuff back then. I was showing you my yellow zone, which we entered, then the orange zone, and that's where the market would really start to take note, and it did. So we had the biggest drop in months, 8% off that post. That was a previous Fed meeting. We turned around, or some of us did. I did close the QQQ shorts there, gained for me first part of the bounce, not the whole thing, but then also turned around, shorted there, but then one more covered there, played one more bounce, got back in, and like I said, this is I'm still in that starter scale back short position without any hedges, and really pushing the limits of it, because there's the downtrend line in QQQ. But again, I'm drawing a lot of lines here, but you can see that's just a very clear chart. So as I said in today's earlier video, we're coming up. I could see a potential for a little more upside in treasuries, but then you get into even bigger resistance. But with the way things have been, it wouldn't surprise me to see the treasury bond, those that have profited on this recent run up, any or all of it. Remember, we clipped the bottom like to the penny. That was a perfect entry there on ZB, or if you took TLT. And so if they go down, treasury bonds, you may or may not see the market react. But look, this is the evidence. We have both the stock market at resistance, meaning the downtrend lines on SPY and QQQ, and you have treasury bonds at resistance. So, if they both, one reverses, they both probably reverse, and that's that. And so it either works out or it doesn't work out. And just a quick update on NQ, the NASDAQ futures. There's that 60-minute chart, hourly candle, 60-minute chart. There's the same downtrend line off the highs right there. That was the post-Fed, the previous Fed meeting. This was the last one right here. This action here, that was the initial Fed rally and then fade, and then what we had here. This was the previous Fed meeting. This was the initial reaction the day of. We waited, throw out a short trade option idea, an aggressive one there to swing down to the bottom of the range and or hold out for a break below the range, saying that if we went back down to the bottom, we would most likely ultimately break down. That's what it was. So that was 8% high to low with a reversal right at the bottom, almost just like TLT recently or ZB, a perfect reversal when T2 was hit. Bounces carried forward a little farther than I liked and wanted to see, and hence my sitting tight on swing positions, waiting to get aggressively short again if the 1800 level on NQ fails, and 433 on QQQ. Like I said in the earlier video today, it needs, ideally, nothing, look, sometimes you don't always have these perfect technical setups, but ideally, this is where we should reverse to keep the bear case alive. Otherwise, like I said, it just, we burn through there, and it's possible. Maybe the bonds keep going, and or most importantly, the stock market, if we continue on up and clearly take out these highs, especially after the sell signals that I just showed you on QQQ and SPY. They're short term. Those are just 5-minute charts. You want to play the odds in your favor a little more, go to a 15-minute chart, wait for a 15-minute close below, and then that's just going to increase the odds that those will play out. So the only other thing that could be even better to help support the case for the a pullback here in the stock market, other than the bonds pulling back as well, is crude oil. Remember I mentioned crude looking attractive here the other day at that $78 support with uptrend line support just a hair below it, and positive divergence building on the indicators below. And crude is up today. Remember, we also are still elevated up into those zones I gave you. We're still in the yellow zone on crude, which is also the bottom of that is support as well, 74. And if you look what's going on today, nothing much, but we've turned positive on crude. We were down. This is today's chart. This is a 1 minute chart. So USO is a crude ETN. We gapped down lower. We're down quite a bit from yesterday's close. We were down 1.3% so far. Crude's made a recovery, turned around. Again, the crude's volatile, so that's not huge to see a reversal like that. But the point I'm trying, oh, and there's a little downtrend line as I just clicked on the 60-minute chart. I forgot I even had that there. So there it is, positive divergence on the 60-minute chart. And we just took out this downtrend line. Got this little area here of kind of sideways, a slightly lower consolidation recently. So if we can push on up there, this will only add to the case right now, again, for active traders or, like I say, I hope everything I put here is pretty clear when I talk about shorting at the trend line here for either a quick pullback trade. This is the 60-minute chart of QQQ. And I gave you the targets were earlier on this 15-minute chart. But if you go to the 60-minute chart, like I said, then an active trader is only going to look for a quick pullback. There's that uptrend line, get the little quick pullback. I gave you a first target, I think was about right here, with a second potential target right there, or let it run. Maybe this is just another big whipsaw to the upside, and you have a stop here initially, a relatively tight stop. You don't want to see QQQ go much above that trend line, right? Especially on a daily closing basis, right? So stops, it's excellent RR. I mean, look, the odds of it might not be. And I said the same thing when we shorted the post-Fed pop. I said, look, this is an aggressive counter-trend trade. The odds, aren't super high is going to play out because the market just hit all-time highs. So we literally shorted an all-time high, meaning there's no resistance above. There was no sell signal. It was, to me, we were at the top of the trading range and spiked slightly above it, and it felt right. And so that was the time. And the same thing here. Well, actually, I'm going to take that back. We had a rally into resistance and now a break. But where I'm going with that is, given we're back above 433. So, you can either take the quick 1.2% if that first target's hit earlier today, I said, and then a little bit more if 433's hit, or swing for the fences. If you give it a little bit wider stop, if we start to get profitable, especially, you can lower your stop to break even if you want, and then let it run in case this is just the counter trend bounce that I still suspect it probably is. Like I said, that's where I start to suspect it a lot less if we go up a lot more. So we kind of hit the upper end. Even before we took out 433, I was talking about the downtrend line as kind of as being the upper end of my bounce target range, where I could see the Qs going and still going down lower. So all right, we'll see where we go now. So far, not very impulsive selling, but we're still below the trend lines on the 5s and the 15-minute chart. So, there it is. I gave you that little minor support. See, and this is, again, guys, this is the realm of the active trader. You can sit here all day long. You can tell you on these 5-minute charts where you're going to get reactions. So we broke down, then SPY broke down, and look where we hit. And I put that in early in the video, 441.23. And we'll come down, and they'll buy it on or around today's gap. That's yesterday's close right there, that yellow line. And you have a little price support just below it. So this would be, if you want to know the next hiccup, right there, like this, a little, come on down, maybe a little hiccup there, next stop there, and so forth and so on. All right, guys, I'm going to wrap the video up, get it out to you guys. And this is, again, active trader stuff. Although I will say this. If you've listened to this now and you're not an active trader, you say, Randy, that's just too much. I don't have the time, the skill sets, the inclination, whatever. The same basic premises hold true. This is a 5-minute chart. I'm showing you levels, divergences, levels that when taken out, levels that a bounce was likely, like 441.23 because of that reaction low and these reaction highs that make that support, minor support. You wouldn't even see it on the daily or even a 60-minute. That's why you got to drill down to these 5-minute charts. But then, the same basic premises hold true in technical analysis when you got to the daily. Somebody asked me today, they were, concerned and going to stop out of their QQQ shorts, and asked if there were still divergences. As I said, yes, on the NQ futures, not on QQQ on the 60-minute chart. That's kind of my go-to swing trading time frame. But however, still very, very much. This is the daily chart here. So we're coming off a big divergent high. Just like back in November of 2021 when the NASDAQ peaked, nobody wanted to believe it. We were short for the same exact reasons, the big divergent high right here. We had sell signals, breakdowns, and and I already covered this, guys, that back then we had a rally after this was the peak, and we came back up and fell a little shy of it. Then we broke that trading range, but even once we broke that comparable trading range, we had to kick back into it. And this I highlighted the other day, just like right now. So this is what they do. Who are they? What's they? They isn't any one person or entity. It's just it's market forces. Whether they're nefarious and intentional from algos and trading desks that can move the market, or it's just the way things are. This is what tends to happen. So you had a breakdown, snapback rally, back into the trading range, but then boom, once it fell again. So this right here is exactly what I'm talking about with 433. And that's where I say, if 433 goes again, that's where time to get aggressively short, in my opinion. Even though that was back then, it was 378 because it was the bottom of that trading range. So there was your whipsaw 1, whipsaw 2 back above, blew out all the shorts, or a lot of them. Made them second guess, because the market was back then just doing the same thing, fresh off new all-time highs, and boom. So that hasn't happened yet. I suspect it might, probably will, but unless it does, you just can't, because this can be, you can see, as I showed you in the earlier video today, it can certainly go the other way. There's no guarantee just because there's similarities. That's the problem with technical analysis. You can talk in probabilities, but anything's possible. Is what I'm getting at. Oh, and then continue on what I was saying to the reply. So in the weekly chart, you still have the big divergence. It was a big divergent high, and for the first time in many, many years, about decades really, big divergence on the monthly. And this is what shapes to me where the market's going longer term based on these. Whether we push up and make a marginal new high, which would just be a blip. It'd hardly be even discernible on here on this monthly time frame. If we go up, make a marginal new high, and a marginal, when you're talking a monthly time frame, each candle's 1 month. It could be a couple months. I don't. It's not my favorite scenario, but it is one, and I've addressed it. If we do punch up, make a marginal new high, and I could still make the same case I could back here, based on the technical indicators, breadth deterioration. It's not just divergences, guys. That's a tiny part of it. This is what I cover: bonds, interest rates, economic indicators, the ones that are more reliable than some of the other ones that are being, touted on bubble TV, and everything else out there. So let me wrap it up now. I was just waiting to get that level taken out. It should be soon. They just popped it a little bit there for 41.23. Once that goes, you'll see, selling increase, and SPY is hanging in there. There's that measured what. So you can see on SPY, beautiful. There's all these reaction 1, 2, 3, all these candles here. More important are the recent reaction lows there, and so that's what SPY is dancing on. So I'm going to wrap the video here. By the time I get it out to you, I suspect these levels will be broken, and see how it took hours. I'm going to just measure it. We've been moving sideways almost all day. That's 2 hours right there. I just circled this 2 hours. I'll bet you within 10 minutes, 10 to 15 minutes, we'll probably take out and drop down, this whole thing down to this level here. Like I said, a little hiccup along the way right there. There are your little micro levels. All right, guys, I'll get it out to you. So those of you that are interested can trade it. And like I said, there's many ways to do it. You can active trade, and you get the little short quick pops, and they add up. I can promise you that. And it's a big part of my profits every year, just scalping these little 1% moves here and there, in and out when the markets are conducive or set up for an active trade. And then you know, when the, you know, time comes for a swing or a position trade, then that's what we'll do. And all right, I'm going to get it out to you guys here. This has been Randy Finney with Right Side of the Chart. Have a great day.